Pure, good to see you. How you doing? Evening, you're the first one in. JP, good to see you, so brother. How you doing? Evening, you're the second one in. Let's go. Okay. What's up, Miles? Kerry, good to see you. So how you doing? How you been? How's things? How you feeling? Better, a lot better than I was, to be fairly honest. And yeah, I'm still on the meds, but I'm slowly going to be coming off them because I'm feeling a lot better. What's up, CMF? Let's go, Kerry. And on today's live, we're going to be talking about regarding the new tariff policies that are going to be coming in soon. So Trump is apparently going to be introducing in 2 to 3 weeks' time new tariffs, which the crypto market reacted not in a negative way, but also not in a majorly positive way. But it does seem to be positive regarding the new tariffs is going to be introducing. They're no longer going to be some extortion tariffs because a lot of countries have come to the table to do some sort of deal. So we're going to talk about that on tonight's live. We're also going to be talking about tonight's live regarding the Trump tax bill, which has just passed the committee. And Bitcoin showed positivity towards that. Some crypto assets also showed positivity towards that. We're going to talk about that on tonight's live. We're also going to be talking about another company, a Singaporean company that's decided to invest a tremendous amount into Bitcoin. We're going to be talking about Galaxy Digital on tonight's live as well, listing themselves on the NASDAQ, which we've talked about before, but they're going to be introducing something quite interesting towards the stock market. We're also going to be talking about a perspective that's came out from Eric Trump on tonight's live as well. He did an interview of Cointelegraph talking about essentially the crypto world and the banking world and so on, and how, essentially the banking world is a fool for not accepting crypto, a lot more sooner pace. We're also going to be talking about another Chinese company that's came forward and essentially decided to, enter the crypto space. They're coming in obviously from Hong Kong, mainland China. But it's interesting to see, Chinese companies one by one deciding to enter the crypto space. We're also going to be talking about tonight's live regarding 14 US states, essentially who hold a certain amount of Bitcoin, but through MicroStrategy. So we're going to talk about which American states are actually involved inside the crypto space. We're going to be talking about the Genius Act on tonight's live as well, and regarding the stablecoin regulations, how far it's came and where it's going to be headed. We're going to talk about on tonight's live also regarding the global diplomatic talks that are going on right now in terms of, where we're heading towards the market space on a global basis. And in terms of the crypto prices, are we expecting essentially a much more sooner run, or a little bit more time left until we have that run? We're also going to be talking about an interesting perspective coming from Bitwise's CIO on tonight's live, telling everybody to diversify their portfolio and essentially not just to be stuck on Bitcoin, which is an interesting one. We're also going to be talking about Coinbase in terms of the hacking situation. So on yesterday's live, I got asked a question regarding essentially Coinbase and their hacking. I don't know much about it, but I have a lot more details on that matter. We're also going to be talking about tonight's live regarding Panama and El Salvador coming together with crypto talks, and that Latin American countries are getting more involved inside the crypto space as time goes by. We're also going to be talking about tonight's live regarding UBS Bank, and essentially the information they've released is that their high-profile clients are actually more involved inside of crypto, and day by day it's increasing actually. So essentially, those are the topics we're going to be discussing on tonight's live. So banking news, tariff news, Trump news, global diplomatic talk news, regulation news, and policy news, and essentially diversification coming from a CIO of Bitwise. So Before we talk about any of those news topics, let's go inside the comment section. Let me see the intro of tonight's live. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles, and this is episode 309 of the CMF Live, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything you need to know about regarding the world completely transforming into a digital space. We also do Q&As on this live, which means if you do have any questions, put it down to the comment section. More than happy to answer any questions or statements you may have. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Also, thank you so much to everyone from the CMF who has liked this live, retweeted this live, and put a comment outside the live. If you watch us on X, if you watch us on YouTube, thank you so much to everybody who's also liked the live as well. If you haven't done that, CMF members, just take 5 seconds to like the live and retweet it. It does really help to essentially expand the CMF live show so it can reach a bigger audience and help out a lot more people. Now, before we go through the first news, which is regarding Trump and his tariff policies, let's go inside the comment section first, and then we go straight into the first news. Let's see where we're at. Pierce, evening, Miles and CMF. Good to see you as well, Pierce. How you doing, brother? How you been? Manny, good evening, Miles and CMF. Good to see you as well, Manny. How you doing? How you been? Good to hear. Let's go, JP. Shelly, morning, Miles and CMF. Good to see you as well, Shelly. How you doing? Morning. How you been? Hi, Miles. Pablo, good to see you as well. How you doing? How you been? Adi says, good evening, Miles. I hope you're well, mate. I'm doing a lot better, Adi. Thank you so much for asking. Dennis, good to see you as well. How you doing? Hi, Miles and CMF. Good to see you as well, Dennis. How you been? Now, first news on tonight's live is regarding Trump's tariff policies. So tariffs essentially cause repercussions inside the market space. Stock market and crypto market, we've seen this essentially in the past, but it don't last too long either. So every time we have tariff news, it lasts about 24 to 48 hours max, the repercussions inside the stock market and the crypto market space. And Trump apparently is going to be introducing new tariffs, but they're not going to be extortion tariffs like they were in the past, because now Trump has a lot more control over the market space, which is what we like to see, the world restoring itself. So here it is. Trump signals new tariffs as US shift trade strategy. President Donald Trump hints that the US will impose new tariffs on its trading partners rather than negotiate deals with all of them, because essentially they announced that it's not beneficial for Trump to be essentially traveling to every country individually to do certain deals, and it's just better to essentially impose small tariffs and do some trades basically over the phone. It's a lot more easier. And yes, Trump has made his essential vacation trips to the Middle East, and he's closed quite a lot of deals for the US, to be fairly honest, but they've decided that essentially one by one countries is not really the solution, and collective is more of a solution. So he claimed that they would announce new tariffs soon, since meeting with all these partners would be impossible. Speaking essentially today with the business executives in the United Arab Emirates, Trump revealed that they would unveil new tariffs over the next 2 to 3 weeks. He stated that the Treasury Secretary Scott Benson and the Commerce Secretary Howard Lutnick would communicate in letters detailing what countries must pay to do business with the United States. Trump also essentially argued that while roughly 150 countries wanted to make deals with the United States, meeting all of them for negotiations would not essentially be practical. He had paused these essentially tariffs for 90 days, ending essentially in July 8th, while essentially retaining the 10% base tariffs. Thus, countries have been under massive pressure to close deals with the American government before the deadline of essentially July 8th. Some nations were essentially even hoping for a zero tariff deals like Japan and Argentina. The US has essentially agreed with the UK on new trade deals. Under the agreement, the first 100,000 vehicles imported into the US by the UK will be subject to 10% tariffs, while any extra vehicles will be subject to 25% tariffs. The US also announced a 90-day pause, essentially with the tariffs on China this week, while they work out their long-term agreements, which we essentially discussed yesterday. Nonetheless, the US has been talking with the EU, Japan, India, and other countries. President Trump's Gulf tour has paved the way for the UAE to purchase advanced AI semiconductors from the US companies. The UAE also pledged to increase its energy investments in the US by over $440 billion in the next 10 years, And it's also back in March, the UAE also committed a $1.4 trillion investment in the US for essentially a decade. While Trump mentioned during his tour, he commented, "We're making great progress for the $1.4 trillion that the UAE has announced and intends to spend in the United States." Trump had suggested going to Turkey and engaging in peace talks between Russia and Ukraine. However, that did not happen. Nevertheless, Trump claimed that he essentially would like to meet with the Russian President Vladimir Putin as soon as they can arrange a meeting. On his way back today to the United States, Trump also confirmed that they essentially offered Iran nuclear deals, urging that they have to move quickly. In the last weeks, state officials also from Iran and the US have been discussing Tehran's nuclear programs. Trump even essentially announced that he would consider letting the country have its own civilian nuclear program. So a lot of deals are happening essentially with the United States and the rest of the world, which is excellent to see because the markets can stabilize themselves. The markets can also climb in a positive way every time these deals happen. And it's nice to see 150 essentially countries are willing to talk and essentially do some sort of a trade deal with the United States. All in all, incredible. The Iran deal, I don't think is going to go as according to plan, but the rest of the essentially deals, I do see them happening 100%. I mean, the Middle Eastern deals already happened, to be fairly honest. The Middle East is going to be investing incredible amounts essentially inside the US market space, which Democrats are saying Trump is closing no deals and there's no proof, but the reality of it is there is proof and there is money coming into the US because of Trump. Two, the crypto market space reacted slightly in a positive way. Bitcoin rised just a little bit in a positive way because of all the trade deals that's been happening inside the Middle East, all the positivity that's coming with the US making groundbreaking deals and bringing trillions of dollars into the US, especially one of them being a $1.4 trillion decade deal for the US. So all in all, the markets are going to be going on the upside in a positive way because there's no negativity so far. Also, regarding the Trump tax bill is what we're going to be talking about next. So Bitcoin also showed, and the crypto market showed slight positivity, about 0.1% or 0.2% on this matter, regarding the Trump tax bill that's just passed the committee. So here it is. The Trump tax bill successfully passed the House Ways and Means Committee in Washington, D.C. Internal Republican disagreements over the bill's provisions were insufficient to prevent its progression through the committee, the sources say. With passage in committee, the bill now heads to the House floor seeking approval amidst essentially the continuing GOP debates over financial cuts. This Trump tax bill is actually going to be a very positive thing for the middle class and the lower class. Conservative members express essentially unease over proposed spending cuts, yet the bill promises lower taxes for middle income essentially earners, potentially impacting federal revenue streams. This again brings some sort of stabilization towards the market space. It shows positivity towards the stock market and the crypto market in the long run. Although this bill does have to be maintained with Jerome Powell essentially doing rate cuts in between. Following intense negotiations, the Trump tax bill passed the committee with the support from Republican members. The signature legislative essentially initiative seeks to further President Trump's economic agenda by essentially addressing tax concerns. Key figures such as Speaker Mike Johnson aims to push the bill forward without Democratic support, relying on Republican votes to essentially advance the bill. It's interesting to see because Democrats have always said that they are the party of peace. They are the party that essentially helps the normal average American, is what Democrats essentially, go around and say and protest about, or liberals protest about. Democratic politicians is what I'm referring to. But in reality, the Democrats couldn't even be bothered to vote for essentially tax cuts for the middle-income earners or essentially the lower class in any sense. But yet the Democratic Party goes around and says they care about the average American people, but they can't be bothered to vote in favor of the American average person. Immediate implementations also include major tax reduction projected for average income individuals, potentially altering spending essentially patterns. The bill also proposes limited reforms in Medicare, raising concerns among conservatives looking for more aggressive cuts. Rep. Essentially Ralph Norman highlights the shallow impacts of the proposed $2 trillion cuts, labeling as a teardrop in the ocean. Market essentially reactions on this matter of the essentially Trump tax bill that's been essentially passed through the House focuses on potential gains for the middle-class taxpayers through the certain GOP lawmakers from high-tax states, emphasizes the need for a deeper SALT essentially deductions. Senator essentially Rand Paul comments on the irony of the Conservatives approving a debt ceiling increase, which essentially revives debates over fiscal responsibilities. The bill could shift financial focus towards middle-class benefits, but warns long-term essentially economic strains without balanced cuts. Essentially, Jerome Paul needs to do some sort of rate cuts, which is his job, which then essentially Jerome Paul does refuse to do rate cuts. Historical data suggests that potential regulatory challenges ahead impacting digital currencies and broader financial markets. So experts and analysts are coming forward and saying that this Trump tax bill is actually going to be having positivity on towards the crypto market space and even the stock market space, to be fairly honest, because it's going to essentially, the tax cut is going to put more money back inside of people's pockets, the average American's pockets, which essentially they could spend on investments or whatever they want to be spending their money on. But they're seeing it as a positive for the market space because more money is going to be left in the pockets of average Americans. Again, the irony of this entire thing is that the Democrats are actually not voting in favor of, tax cuts for the average American, even though the Democratic Party, create protesting saying that Trump is ruining American lives and the Democratic Party cares about the average American, but they can't be bothered to vote in favor of the average American. Now, moving on essentially from the Trump tax bill to a company that's just came forward and they want to purchase a ridiculous amount of Bitcoin and also enter the cryptocurrency space, a ridiculous amount, to be fairly honest. But before we talk about that, let's go inside the comment section first. Let's see what's going on there, and then we go straight into the next news with the ridiculous purchase they're going to be making. Hi, Miles. Pablo, good to see you as well. How you doing? How you been? As I said previously, essentially, this is live, which means live from London, which means if you do have any questions or statements to make, put it outside the comment section. I read everybody's comments one by one and essentially answer to everybody as well. Let's see where we're at. Mike, we're here. Mike, good day. Miles of CMF, good to see you as well. Mike, how you doing? How you been? George, hi, Miles of CMF, good to see you as well. How you doing, George? How you been? Frankie Brother says, good evening, Miles of CMF. What have I missed so far? Frankie Brother, good to see you as well. How you doing? You're perfect timing. I've only read out 2 news. 1 regarding tax bills and 2 regarding tariffs, trade tariffs that are going to be coming in 2 to 3 weeks from Trump. Now, medical group. Basel Medical Group plans a $1 billion essentially Bitcoin acquisition. Basel Medical Group, led by CEO essentially Darren, plans to acquire $1 billion in Bitcoin through a share swap with investors, confirming the news essentially coming out today. BMGL's move signals a growing trend in non-financial sectors adopting digital assets, potentially impacting Bitcoin's price and movements and treasury strategies. Basel Medical Group Ltd, a Singaporean-based essentially healthcare company, has unveiled plans to purchase $1 billion in Bitcoin via share swap. The acquisition involves collaborations with institutional investors. Dr. Darren, BMG's essentially CEO, leads the initiative on this matter, aiming to diversify the company's reserves and capitalize on market opportunities. According to essentially Dr. Darren, the CEO of Basel Medical Group, this $1 billion financial transformation will give us unprecedented capacity to execute our Asia essentially growth strategy while maintaining conservative essentially financial management. Our expanded balance sheets will also allow us to move quickly on strategic opportunities as we essentially build a premier healthcare platform across essentially high growth Asian markets. The crypto market closely monitors the significant investment, with analysts suggesting potential upward pressure on Bitcoin's price once essentially this payment comes through. $1 billion acquisition is quite a big number. BMGL's essentially strategy could encourage similar actions in healthcare industries. To be fairly honest, there is also another healthcare company in Canada who made certain investments, not as close to $1 billion, but they made certain investments towards essentially Bitcoin and some other cryptocurrencies in Canada, and they said to follow essentially MicroStrategy's footsteps. This move essentially also underscores the financial implications for treasury management within non-financial essentially sectors, possibly driving regulatory scrutiny and resulting in strict shifts concerning digital asset holdings. Basel Medical Group's official statement emphasizes the pending customary essentially regulatory approvals, indicating the compliance oversights within this transaction. BMGL's actions mirrors precedents like MicroStrategy's major Bitcoin acquisition, such as essentially decisions historically impacting Bitcoin's liquidity and pricing dynamics, reflecting the broader acceptance essentially of digital assets. If successful, BMGL's acquisition may signal a shift towards mainstream adoption of Bitcoin in diverse sectors. The outcome could also inspire further corporate investments in digital treasury reserves. So they're not all, they're not just closing themselves off to a Bitcoin acquisition. They're actually opening themselves up to enter in the crypto space, not just through Bitcoin, but also expanding into essentially other projects, other blockchain companies inside essentially the blockchain space, marking a significant landmark transaction in the Asia Pacific healthcare sector. This is definitely the biggest investments that's ever came from any healthcare company, pretty much around the world, to be fairly honest, $1 billion acquisition. So incredible to see, but also incredible that they're not just closing themselves off to Bitcoin. They're going to start with Bitcoin and expand it within the blockchain space. And with this enormous investment, this should essentially send a beacon, you could say, to other healthcare companies or other companies that are on the same level of this BMGL's company, that, entering and also diversifying a portfolio inside a crypto space could be seen as a safe area. Because, if you're doing essentially an investment of $5 million, it shows that you're not showing much confidence. But if you're doing $1 billion essentially investment, it shows that you have confidence inside this market space. And companies do tend to follow each other's footsteps. Now, Galaxy Digital is what we're going to be talking about. Now, we've talked about Galaxy Digital listing themselves essentially on the NASDAQ, which is incredible to see. Another blockchain company entering the essentially traditional financial market space, the stock market, in other words. But what Galaxy Digital is trying to do now is it has plans to tokenize its shares. Now, we've essentially had discussions before in the past where essentially Wall Street has discussed the matter of tokenizations inside the stock market, which is incredible to see. And we all want to know, which blockchain project is going to be chosen for that tokenization sector. Now, obviously, they haven't revealed what blockchain is going to be used as the backbone of their tokenization, but it's an indication that this could be the first company on the stock market that tokenizes their shares. Galaxy Digital, led by essentially CEO Mike Novoscott, began trading on the NASDAQ today, marking a pivotal milestone. The NASDAQ listing is expected to enhance liquidity and broaden essentially Galaxy Digital's investor base, signaling an advancement in institutional engagements within the crypto market space. Galaxy Digital has achieved a essentially significant milestone by listing themselves on the NASDAQ, a strategy aimed at increasing liquidity and capital resources. This transition began essentially today with the trader ticker under the name of GLXY. Chief Executive Mike Novoscott emphasized the importance of this NASDAQ listing in bridging traditional financial spaces with the cryptocurrency space. This move essentially represents a strict effort to attract a wider range of investors, and also the listing is anticipated to enhance Galaxy Digital's liquidity, allowing access to a larger pools of capital. Early trading saw essentially a drop from $23.70 to $22.57, but overall, the shares of Galaxy Digital so far are up over 20% in 2025 so far. This enhanced market presence may essentially potentially encourage greater institutional interest in crypto markets. The expanded essentially capital pool could also essentially support ventures in digital infrastructure, positioning Galaxy as a notable player in these actors. And previous crypto firms like Coinbase, who are also listed essentially on the NASDAQ, seen a positive market attention post-listing on the NASDAQ. Galaxy Digital's also dual listing mirrors this similar strategies and signals increasing institutional adoption in the blockchain sector. And experts indicate that the NASDAQ listing might predict future essentially trends for crypto native companies moving to larger exchanges. The focus also remains on potential improvements in the capital access and higher investor essentially engagements. With more blockchain companies entering essentially the stock market, it's incredible to see, because you're seeing essentially the traditional financial market space connecting itself essentially with the crypto space, which is what we love to see. That's when crypto becomes a lot more mature in that sense. Now, obviously, there are companies that don't want to go public as well. For example, like Ripple, for the time being, is because Ripple wants to essentially, be the person in charge rather than get bossed about, if you know what I mean. Which is, if essentially you go public as a company and your shares get brought out by essentially, for example, BlackRock or Franklin Templeton or Goldman Sachs or so on and so on, then they can have the loudest voice in your company. And some companies like Ripple don't like that, which also shows that Ripple is not here to play nice, but instead they're here essentially for a takeover, which is also nice to see. Now, moving on essentially from Mike Novoscott tokenizing his company shares, which If he does that, that could send essentially a precedent for other essentially companies to follow in suit. Now, we've also talked about in the past regarding the stock market going 24/7, Monday to Friday, is what they've discussed, because the stock market wants to compete with the crypto market space. So the stock market wants to compete with crypto market space by essentially going 24/7 like the crypto market space, but they've also talked about going towards tokenization. If Galaxy Digital is the first company to start this trend off, tokenizing their stocks, other companies will definitely follow in suit, which will bring a lot of money towards, a lot of liquidity towards the crypto space, towards legitimate crypto projects, whatever is going to be chosen as the backbone of these tokenizations. Now, Eric Trump is what we're going to be talking about on tonight's live. Ray, greetings, Miles of CMF. Good to see you as well. Ray, how you doing, brother? How you been? Good timing. Good to see you. Eric Trump is what we're going to be talking about now. Eric Trump said on an interview with Cointelegraph today that the banks made the biggest mistake of their lives. So Eric Trump did essentially an interview talking about how the banks in the United States were fools for not accepting, essentially of connecting the crypto world to the banking world at a much more faster rate. And to be fair, at that moment in time, obviously we had, Sleepy Joe as the president of the United States, Gary Gensler stopping crypto in every angle possible, CFPB, OCC, essentially DFC. Every essentially department was trying its best to stop the crypto world. And they were all morons, because now they're all trying to push the crypto world more towards traditional financial space. But anyways, Eric Trump does an interview and he says these things. He said there's a famous saying that sometimes the enemy of your enemy is actually your best friend, Eric Trump said. He told the crowd on Consensus essentially in Toronto, Canada. He said that was the Trumps with the crypto community. And I think the banks made the biggest mistakes of their lives essentially for not accepting crypto into the financial world a lot more sooner rate. The son of the United States President, Donald Trump, and co-founder of a Bitcoin mining company, American Bitcoin, is also an advisor to World Liberty Financial, which recently essentially launched a US dollar-backed stablecoin, USD1, and that has already reached $2 billion in market capitalization. Co-founders of World Liberty Financial joined Trump on stage essentially today as they announced that the USD1 stablecoin is now essentially operable across multiple blockchains through Chainlink's cross-chain interoperability protocol, CCIP. Trump painted a vivid, essentially, picture of a personal, essentially, grievance turned into ideological, essentially, conviction, claiming he was cancelled by major financial institutions for his political views, which then got him interested in crypto as a shield against, essentially, financial gatekeeping. He said, so many of the banks have been weaponized, and I was I was case essentially in point, said the son of the United States president. I was probably the most cancelled person for doing absolutely nothing wrong, only because we had a political view, and a political view that might have not been popular with some of the big financial institutions. And guys, they came after me like I was a dog. This is essentially the son of essentially Donald Trump talking about how the banks and during Biden's time were weaponized against him for his political views, or his father, or anybody else regarding the political views, or anybody else being involved inside the crypto sector. And while the tables have definitely turned for now, USD1, he said, is a patriotic financial tool for people and unstable or corrupt regimes. He said it gives so much freedom of financial choices, especially to markets and countries where people have never had any kind of financial freedom and had never had essentially any kind of financial independence. Might be in a country where it's war-torn, where it's subject to corruption. It's subject to ridiculous inflation, he said. Every single day they go to work and their money is being burned under their mattresses. And all of a sudden, we gave the world the ability to be on the US dollar backed one-to-one by US treasuries. Earlier today, lawyers representing World Liberty Financial pushed back against the scrutiny of the US Senate Richard essentially as well, which yesterday, essentially what this is referring to is yesterday, I revealed that essentially Democrats are going after Trump, as always. Democrats are going, because they have nothing else to do, honestly. Democrats are the most, it's just difficult to describe them, Democrats need to be studied. The Democratic politicians and the liberal politicians, they need to be studied by scientists. Honestly, they have nothing better to do than just to essentially go after Trump in any sort of way. Trump's family, Trump's business, Trump's this, Trump that. instead of maybe doing their job of helping to lower inflation, helping to secure American citizens, helping to bring down prices, helping to increase wages. No, that's not what Democrats want to do. All day long, all they think about is planning how to take down Trump. And essentially, is what we talked about yesterday regarding how Democratic Party is going after Trump's crypto holdings, going after the company that Trump essentially created that's backed by blockchain. So this is what essentially Eric Trump is also referring to in the interview he did today. Lawyers representing World Liberty Financial earlier today pushed back against the scrutiny from U.S. Senator Richard, the leading Democrat essentially on the panel responsible for investigating corruption and mismanagement, who had asked about the ownership and investment structure regarding the Trump-affiliated entities, including World Liberty Financial, in a letter last week. The investigation launched by Senator Richard focuses on federal ethics and conflicts. World Liberty Financial pushed against this investigation, maintaining political essentially motives at our play. Senate members questioned potential conflicts due to President Trump's involvement with USD1, the new stablecoin. The inquiry essentially affects perceptions of governance within the World Liberty Financial, highlighting tensions between politics and cryptocurrencies. World Liberty Financial's rejection of the probe raises concerns about transparency, they're saying. Political figures express unease, citing ethical and financial entanglements issues involving USD1. Obviously, World Liberty Financial essentially rejected the idea of a Democrat looking into their company. Makes sense. Anybody will reject any Democrat near their company. Democrats are thieves. If you ever wanted to see a daylight robbery, just look at a Democratic politician, or actually liberal politicians are not that intelligent. But if you ever want to see daylight robbery, just look at a Democratic politician. Don't let them anywhere near anything valuable, because they always put it in their pockets. So World Liberty Financial attorney, Senator. So the probe is fundamentally flawed, and therefore there's no way in hell they're going to get their hands on anything to do with World Liberty Financial. Inquiries into cryptocurrency firms aren't unprecedented, often revealing gaps in regulatory oversights. Experts note that companies with political essential affiliations face increased scrutiny. Historical data suggests that regulatory changes could impact cryptocurrency markets significantly if essentially political connections influence operations. So Eric Trump coming out with an interview with essentially Cointelegraph, talking about how the banking world in the past was essentially weaponized against him and his family, and also the crypto space, you could say, got to a certain extent, depending on what crypto project it was. But it's saying essentially the tables have changed now. Essentially, banks are, getting more involved inside the crypto space, and him going towards crypto, that was one of the reasons, because he realized that crypto is more decentralized, not fully. Everything has an element of centralization, but it's more decentralized than being in a very structured, essentially, the traditional financial world we're in. And also him rejecting the idea of any Democrat going towards anywhere near his company papers to see what they're holding. I agree with him 100%. Now, China is what we're going to talk about next. So moving on from Eric Trump's interview regarding the banking world and traditional world, how things have transitioned to the better, to China. Another Chinese company has decided to enter the blockchain space. We talked about it yesterday as well, where another Chinese company yesterday essentially came out and said that they, want to invest inside the blockchain space. They want to invest essentially into some shares also regarding essentially MicroStrategy shares or essentially Bitcoin ETFs and so on. And it seems like one by one, Chinese companies are maybe diversifying themselves inside the blockchain sector once again, even though China still hasn't introduced any laws for the positive side of cryptocurrencies, but the companies themselves are actually opening up. So here it is. China-linked consumer brand initiates street Bitcoin reserve with 100 Bitcoin purchases. DDC Enterprise, also known essentially as Day Cook, a U.S. essentially consumer brand with Hong Kong roots and operations in mainland China, announced a Bitcoin reserve strategy in a shareholder letter today. The company has acquired 100 Bitcoins to start off with approximately worth $10.4 million, and plans to accumulate 5,000 Bitcoins in the next 36 months. With a target of 500 Bitcoins by the end, essentially, of 2025, according to Cointelegraph, this announcement followed the firm's essential report of the 33% revenue increase in 2024, with the total revenue essentially reaching $273.3 million in Chinese yuan and roughly about $37.4 million in US dollars. The CEO of Norma essentially stated, "We are embarking on a pioneering initiative to position DDC at the forefront essentially of digital assets and innovations with laser focused essentially execution on Bitcoin accumulation." The move makes DDC one of the first companies in its sector to embrace Bitcoin as a reserve asset, according to Bitcoin's magazine. This decision essentially follows on earlier announcements from March 18th, when the company first revealed intentions to adopt Bitcoin to its reserve strategy. DDC, essentially a Bitcoin accumulation strategy, aligns with essentially a growing global trend of corporations adopting Bitcoin or cryptocurrencies as strict reserve asset. Payments reports that the companies are essentially increasing viewing Bitcoin as a long-term store of value for corporate treasuries, with some pioneering firms leading the way and entering the crypto fields. Strategy, formerly known as MicroStrategy, has also been at the forefront of this movement, having accumulated over 500,000 Bitcoins by the end of 2025 through various financial methods, including convertible bonds and equity rises. In January 2025 alone, Strategy raised an additional $584 million to further bolster their Bitcoin essentially purchases. And Japanese company firm essentially Meta Planet has followed in suit, adopting the Bitcoin as a primary treasury, which we've talked about in the past, reserve assets, and issuing bonds to finance its purchases. By April 2025, the company held over 4,500 Bitcoins, with plans to increase its holdings to 10,000 Bitcoins by the year end, according to Bitcoin magazine. The rise of corporate Bitcoin reserves presents essentially both challenges and opportunities for traditional financial institutions, and smart essentially liquidity research suggests that Bitcoin's growing role in institutional reserves could lead to a greater financial conclusion and stability by providing an alternative financial system that is accessible, transparent, and borderless. However, integrating Bitcoin into national and corporate reserves requires a complete overhaul of monetary policies and regulatory frameworks, potentially leading to conflicts with traditional, essentially financial institutions and central banks worldwide. The decentralization nature of Bitcoin means it operates outside of conventional central bank control systems, and Bitcoin reserves may serve as a hedge against inflation and currency devaluations. Franklin Templeton predicts that sovereign Bitcoin reserves will grow in 2025, with politicians in Hong Kong and Germany signaling interest in adopting cryptocurrencies for financial stability, according to Cointelegraph. And this increasing essentially institutionalization of Bitcoin reflects essentially a broader global trend where digital assets are becoming integral to traditional financial systems. As Davis Wright essentially points out, because Bitcoin is a deflationary asset, it can help protect against excessive inflation and stabilize essentially currency values during periods of economic stress. So, on that matter, another essentially Chinese company has decided to enter the Bitcoin space and the cryptocurrency space, which is good to see. These are indications that China might be loosening its essentially regulations on cryptocurrencies if mainland Chinese companies are essentially entering the crypto space and acquiring Bitcoin for themselves. They're starting off with 100 Bitcoins, which they've already purchased, and they're going to be expanding to 5,000 individual Bitcoins. The first acquisition was $10.4 million, which is a reasonable amount for any company to enter inside the crypto space. But the biggest thing to take away from this is that they're not, again, closing themselves up to Bitcoin. They're actually opening themselves up to the entire crypto space slowly. And two, this essentially, again, puts a good light on essentially on the crypto market space. Another company, another major player coming inside the fields, just like that medical company. Now, moving on to 14 American states that hold a tremendous amount of Bitcoin or cryptocurrencies. Before we talk about that, let's go to the comment section first, and then we go straight into that news. As I said previously, this is live, which means if you do have any questions or statements to make, put it down in the comment section. More than happy to answer the questions you may have. So, let's see what's going to start the comment section, and we go straight into the next news. Kamal says, "Hi, brother. How you doing, Kamal? How you been?" Miles, any idea why the markets are going down at the moment? Few. One is the Coinbase situation, which we're going to talk about on tonight's live, but hasn't caused the markets to drastically go down. Two, the tariff talks that are going to be coming in 2 to 3 weeks that was just announced today. And three, there was certain information that was released that the Fed is still not willing to do any sort of rate cuts for the time being. And But the good news on the Fed is they're actually doing a 10% reduction on their employees, which shows that Trump is winning, and the Fed is, as usual, an embarrassment. Michael says, is it known as TDS over here in the US? Trump's syndrome. Syndrome. Maybe. Alex, hi Miles and family. Good to see you. How you doing, Alex? How you been? Happy Pisces. Good to see you. How you doing? How you been? Good evening, Miles and CMF. Bull XRP. Good to see you. How you doing? How you been? Now, if you wanted to know regarding American states, who holds, what inside the blockchain sector? Well, the list has been released. So here is the list of American states that are actually involved in crypto. A minimum of 14 states in America have invested their pension, essentially their public pensions and retirement funds, in Bitcoin ETFs in a way, or essentially all MicroStrategy shares. So a minimum of 14 state public pensions and retirement funds in the United States currently own a total of $632 million worth of MicroStrategy Strategy MSTR stock, a firm essentially famously known for its enormous Bitcoin holdings. The statistics that just came out, which are essentially a summary complied by essentially the creator of the Bitcoin laws, indicates a strong quarterly jump of $302 million in pension fund investments held by American states, 14 American states. This reflects the increased contribution of Bitcoin-tied equities such as Strategy to government-held portfolios. MicroStrategy, named essentially the strategy, is generally essentially regarded as an entry into Bitcoin without directly essentially purchasing the cryptocurrency. The firm has drawn attention for its essentially consistent buying, essentially, and holding of Bitcoin as a part of their long-term strategy. Numerous public funds are essentially employing MSTR as an alternative, more regulated entry into Bitcoin. During the first quarter of 2025, these 14 American states funds collectively boosted their average holdings in MSTR by 44%. California led pack with essentially a combined holding value of more than $276 million via essentially its teacher and public employees retirement systems. This was essentially followed by Florida with $88 million and Wisconsin with $51 million. Other essentially prominent states with investments in strategy are North Carolina with around 107,000 shares plus, with approximately $43 million. Ohio has about 80,000 plus shares with approximately of $32 million. Texas is having essentially a 72,000 plus shares, which is approximately $29 million of exposure. Several states have essentially expanded their stakes also. Utah experienced the largest quarterly expansion with an increase of 184% in their shares. Colorado expanded its holdings by 67%, with Florida, Texas, and Louisiana also recorded impressive gains. Aside from investments in stocks, a number of US states are also proposing legislations to enable direct investments in cryptocurrencies. A total of 47 bills related to crypto have been filed in 26 states. So if you want to know how many filings there are also for cryptocurrencies regarding American states, 47 bills have been essentially filed in from 26 American states so far, of which 37 of them remain active. New Hampshire just enacted essentially a law permitting up to 5% of its treasury to be invested in Bitcoin. Other American states, such as Florida and Arizona, have had mixed success in the same regards. This is evidence that essentially crypto is becoming increasingly accepted within government-level investments and policies, particularly for organizations such as Strategy. Also, it came out today that Saudi Arabia's bank is involved in essentially MSTR stock shares as well. So there's a bit of major international players are actually involved in holding MSTR shares, but 14 American states are holding MSTR shares, and they're holding a tremendous amount. And it's all to do with pension funds and retirement funds from these states that's invested into essentially MSTR shares. And 47 bills that are essentially 37 of the 47 bills are in progress and active still to be voted in and passed. 37 bills are active. This just shows, from where we've come from when it was, nobody wanted to touch the cryptocurrency scene, to now American states, 14 American states investing pension funds in MSTR shares, which is just linked to Bitcoin essentially in that sense. And essentially 26 states in America have 37 active bills right now to pass some sort of cryptocurrency laws. Where we were and where we've come is incredible to see. Now, US advances Genius Act. So, on the topic of bills and laws, we have one or two particular acts for stablecoins. We have the stablecoin regulation and the Genius Act regulations, both to do with stablecoins. One's a bit more restricted, one's a bit more open. The restricted one is the stablecoin bill. The open bill for stablecoins is the Genius Act. And here's some info from Bo Hinnins regarding the matter of stablecoin regulations for the Genius Act. US advances Genius Act to modernize stablecoin regulations. Bo Hinnins, executive director of the President's Digital Asset Advisor Council, announced the Genius Act today to essentially regulate stablecoins, enhancing US financial systems. The Genius Act essentially seeks to boost stablecoin use, maintaining dollar dominance, and essentially in the US and essentially outside the US in terms of digital asset market spaces. Bo Hinnins emphasized the Genius Act will modernize US financial systems by regulating stablecoins like USDT and USDC. The bill ensures that these assets comply with rigorous anti-money laundering AML standards, encouraging institutional investment. Stablecoins essentially promise game-changing financial transparency, while changes and regulations could lead to more investments in projects involving Ethereum and DeFi protocols. This policy shift essentially fund transfers, helping American financial systems become more transparent and low cost. Market actors remain cautiously optimistic. Bo Hinnins' statements that the United States is ready to lead this transformation in stablecoins underscores broad industry support. Bipartisan consensus essentially in Congress reflects a confidence in stablecoins' regulated future, assaulting US essentially leadership in global finance. Moves to regulate digital essentially backed stablecoins previously enhanced their institutional acceptance inside the United States and leading to increased issuance and greater financial ecosystem participation. Experts from essentially analysts and experts suggest that the fostering by a more structured regulatory environment in the Genius Act could propel US economy leaderships and catalyze essentially the Department of Innovation blockchain technologies, ensuring systems integrities and market appeals at a global scale. Regarding also the Genius Act that's going to be passed quite very soon, to be fairly honest, is the what's going to be happening to stablecoins. I'll tell you now. One part of the Genius Act they're still discussing back and forward on is, if they don't regulate a particular stablecoin, which we've talked about in the past as well, but it is a part where they're still stuck on, which is if they don't essentially pass a certain stablecoin, let's just say in this sense USDT or USDC, and they don't get essentially approved by the Genius Act when the Genius Act passes completely, is that this particular stablecoin, if it's a US dollar stablecoin, so if it's a European stablecoin, a Japanese stablecoin, or whatever stablecoin, it doesn't matter. But if it's a US dollar stablecoin and it doesn't meet the requirements for the Genius Act, when the Genius Act is, essentially a law, then that US dollar stablecoin is not allowed to operate even outside the US, because the US sees it as, if we don't approve this US dollar stablecoin, then it's a risk for Americans who live outside the US that might use the stablecoin that we don't see fit, according to essentially what we see as fit for a stablecoin. And one of that, the essentially essence is that they have to hold a certain amount of their investments in US and also be transparent on that matter. So it's very similar to the MiCA regulations. But the MiCA didn't say, if USDT is not approved in the EU, it's not allowed to be used by EU citizens outside the EU as well. But America is thinking about introducing that curveball, which could make life difficult for certain stablecoins if they don't pass the requirements. Now, what we're going to talk about next is the diplomatic talks that are happening. So there is a lot of diplomatic talks that are happening right now in terms of China, in terms of essentially China and the US, in terms of Iran and essentially the US and the Middle East, which we talked about earlier on tonight's live. So here it is. This weekend promises an intriguing period for cryptocurrency enthusiasts. as essentially Bitcoin is, positioning itself at 103 to 104,000. Simultaneously, altcoin is experiencing a low primary due to Ethereum's temporary pause. However, whispers of upcoming significant events might introduce unexpected movements in the digital currency arena. President Trump essentially recently hinting at the potentially speaking with essentially Chinese President Xi Jinping, possibly as early as Saturday. So US President Donald Trump is going to be speaking with the Chinese essentially President Xi Jinping this Saturday. If China and the US come to some sort of an agreement by essentially Monday or next week, and the news comes out, China and the US have signed some sort of a trade agreement deal, then that's going to essentially create a very positive momentum in the stock market and the crypto market, because Bitcoin still tends to follow tech stocks. So President Trump's recently hinted at potentially speaking with Chinese President Xi Jinping, possibly as early as Saturday. Although he has essentially expressed some ambiguity essentially with the term probably, an announcement of this nature from Trump suggests a high likelihood, especially during such globally sensitive times. I mean, it only makes sense for China essentially to come some sort of agreement with the US, because China pretty much lost everything, to be fairly honest. A lot of people actually thought China was going to win against the US in a trade battle. Those people were very deluded. The reality of it was that they were going to lose, guaranteed, because China had essentially tried to get the UK to be their essentially ally and essentially a partner in this massive agreement deal. China said they're going to put out the red carpet for the British Prime Minister if he comes to China, which then that didn't go to plan, because the UK has now become the strongest ally of the US. Not only that, but it was announced today that the UK actually now holds more US Treasury than China and Japan, which is incredible to see as well. 2, the Middle East also turned their backs on China as well, recently with what's happened with Trump going to essentially Saudi Arabia, United Arab Emirates, Kuwait, Bahrain, Qatar, and all that. And the Middle East has also turned their back on essentially China as well, in terms of, China and the Middle East coming together to go against, the US and Trump. That didn't really work out either. So China lost their massive trade deal they were going to be having with the UK to go against the US. That failed. The Middle East decided to back Trump instead. So that failed for China. The Middle East also gifted, incredible things to Trump. They gifted him medals. They gifted him essentially presentations and the properties they're going to build and the decades of investments they're going to do in the US. So, China was fuming on that matter as well. And also essentially lifting sanctions on countries like Syria. That also made China fume as well, because believe it or not, essentially China, through Iran, they do certain investments to make wars continue in the Middle East. And when Trump essentially lifts sanctions on Syria, it means that Iran needs to back away and stop doing random investments in the Middle East. So there's a lot of things that essentially Trump has done so far that has infuriated China. Not only that, but Chinese businessmen and banks have also put pressure on the Chinese president, Xi Jinping, to back down. Also, there's been a tremendous amount of investments that have essentially investment bankers or essentially family businesses, and also essentially VC companies or major players that have sold off a tremendous amount of Chinese shares. So China was getting hits from every angle. They were getting backstabbed by their own BRICS members, for example. India essentially decided to take over China's business with the US. So India essentially being a BRICS member backstabbed every angle possibly, every possible angle. China was backstabbed in some sort of a way, because China thought or assumed for a second that the world will turn their back against the US and Trump. But the reality of it was the world accepted Trump and the US with open arms. No matter how much essentially CNN or Democrats or Democratic politicians or liberal politicians or even Democratic content creators on TikTok, and essentially I'm not going to name who they are. Everyone knows who they are. The Democratic and liberal content creators and so on. No matter how much they say the world hates Trump, and China is essentially the best, and even though they're US citizens, makes no sense. But the reality of it was the world accepted Trump with open arms. and did so many deals with the man. And China got left behind. So I said this a long time ago. China should have came to the deal, should have came to the table earlier on. They should have bended a knee and came to the table earlier on. They had no choice. But they decided to go through the hard way. And China learned that even their BRICS brothers and allies turned their back against them. When India did it, it was incredible to see when India essentially decided to take away all business for you from China. But anyways, that has caused China to come to talks because they lost everything. They got pressured. Xi Jinping got pressured by his own people, business people. American companies were selling off Chinese shares. BRICS countries turned their back on China. The UK turned their back on China, even though that short of signing the UK. And also the Middle East turned their back on China. Everybody turned their back on China, and everybody chose the US and Trump. So on that matter, given the current climate, this conversation appears probable for China to be coming to the table because they have no choice. Both the United States and China are struggling under the weight of tariffs, but China is struggling 10 times more than the US is ever feeling it, negatively impacting economic forecasts. Triple-digit tariffs essentially rates pose serious risk, particularly such as independent economies. A dialogue could also essentially pave the way for improved ties and softer essentially diplomatic communications that might benefit global markets. Under essentially optimistic circumstances, a surge of interest towards coins like XRP could also occur. This is essentially what was said as well. Under the optimistic circumstances, a surge in interest towards coins like XRP could also occur. Having recently stabilized, XRP found ground at essentially $2.35 level, though it hasn't essentially convincingly surpassed $2.53. Should optimism prevail this weekend, reaching a peak of $2.75 remains a realistic possibility for XRP. AVAX, although facing challenges, retains a hopeful outlook, maintaining its support base around $22.30. Market essentially enthusiasts expect that a push towards essentially $28.95 could trigger further gains, yet substantial inflation and competition from Solana essentially deepens the immediate prospects. Recent hints of a US and China dialogue are blustering market speculation and slight optimism, you could say. So yes, the market might be slightly negative now, but going on Monday forward, we should maybe get some sort of a news regarding China and US talks. Next week, in other words. AVAX's trajectory points to a 28.95 as a critical launching point for inflation and competition and presents hurdles. A breakthrough for XRP could also be on the matter as well. Ultimately, any significant diplomatic progress could essentially, between these two global leaders, US and China, could ripple positivity across crypto markets, setting the stage for compelling shifts in both altcoins and Bitcoin's essential valuations. Investors and market followers will closely monitor these developments, hoping for a diplomacy to provide the next boost inside the cryptocurrency market space. So, analysts, experts, Wall Street, business owners, CEOs, executives, board members from around the world are right now sitting on the edge of their seats for next week, because it's going to be revealed essentially what the talks were essentially with China and the US, what talks essentially Trump had with Xi Jinping, in other words. If it's positive talks, we could be on the matter of the crypto market flipping on the upside and getting that boost it needs. So crypto market a little bit down today, going essentially into the weekend, but Monday onwards, they're suggesting, consider it as an outcome, don't take it as gospel, but they're suggesting, based on what Trump said, that he's going to have some conversations, and that essentially with Xi Jinping on Saturday, and that it's probable that they're going to come to some sort of an agreement. The markets are sitting on the edge of their seats for next week. Now, Bitwise is what we're going to be talking about next. You always hear CEOs, CFOs, CIOs of any company coming out and saying, they're going to be doing certain investments in Bitcoin. Even on tonight's live, I read out certain news, essentially announcements regarding the investments that's going to be made essentially towards Bitcoin acquisitions or essentially MSTR shares and so on. But for the first time ever, we have a CIO of a massive, massive blockchain company a crypto exchange, come out and say that maybe it's time for diversification in the crypto space. Because all you hear from CEOs and essentially CFOs of companies and so on is that, invest into Bitcoin because they see it as decentralized and so on, so on, so on. But for the first time ever, the CIO of Bitwise Exchange recommends diversifying your portfolio beyond Bitcoin, which is something that you never hear from any CEO or CFO or CIO of any, not just blockchain companies, but of any company. They always say they're going towards Bitcoin, you should be going towards Bitcoin. But for the first time ever, we're hearing diversify yourself beyond Bitcoin, is what the CIO of essentially Bitwise is saying. So Matt Hugin, advocacy for broader cryptocurrency investments reflects on the significance of essentially of what's happening in the altcoin section in terms of Ethereum's recent prices or in terms of the increases had recently, suggesting a shift in strategy might benefit investors as market conditions evolve. The Ethereum rally that we slightly had of 37% brought attention to the importance of diversification in crypto portfolios, Matt Hugin said, of Bitwise Asset Management highlighted. This sentiment essentially aligns with the historical parallels drawn from essentially from the early 2000s internet era. Okerland's essential insights stress the necessities to move beyond Bitcoin, emphasizing the benefits of investing in other cryptocurrencies. The rally caught many off guard, signifying renowned interest in diversified crypto holdings. Matt Hugin suggests that this trend may lead to further capital inflows into niche digital assets, potentially driving price increases across multiple cryptocurrencies. Bitcoin, he said, is the king of crypto assets, the largest, most liquid, and most established. And yet, I think most investors should own other cryptocurrencies. Matt Hugin said this, Chief Investment Officer at Bitwise Asset Management. Financial markets could see significant essentially capital rotation as the rally prompts revaluation of crypto investment strategies. Institutions are likely to increase allocations towards emerging cryptos. Another perspective from Matt Hugin, CIO of Bitwise, he's saying that institutions are also moving beyond Bitcoin, that institutions are diversifying themselves to emerging crypto projects that they see as the next leg up, for example. Institutions are likely to increase their allocations towards emerging cryptos, diversifying beyond Bitcoin and Ethereum. This could result in amplified investment activities without unprecedented coins and tokens. Matt Hugin foresees further growth potential for altcoins, citing institutional interest in Ethereum and other niche assets essentially as key drivers. This perspective underscores the evolving landscape in cryptocurrency investment strategies, hinting at a more sophisticated, diversified approaches in future cycles. So, the CIO of Bitwise comes out and says that you should be essentially diversifying portfolio starting now. He's saying that institutions are moving beyond Bitcoin and Ethereum also to diversifying their portfolios. He's saying that multiple cryptocurrencies, not just Bitcoin, multiple cryptocurrencies are going to be seeing that massive uptrend. It's It's true. It's true. Look, it's facts. I've always said this. The more we go towards regulations, it's going to be very structured, regulated, institutional run is what we're going to be having. And as I said previously, if you want to know which cryptocurrency is going to do the best, especially when ETFs are released, it's easy to tell who has the most filings. When a filing is done for any ETF from any crypto, essentially from any financial institution that has done some sort of ETF filings for an XRP ETF, a XLM ETF, a HBAR ETF, essentially a Solana ETF, a Cardano ETF, a Dogecoin ETF, you could tell who's going to do the best by seeing who has the most amount of filings. That's an indication of their client base wants that particular token. And also as an ETP, XRP did the best. That's just facts. But it's nice to see that a very high profile person in a blockchain company and one of the biggest essentially exchanges, crypto exchanges out there, come out and say that one, you need to start diversifying beyond Bitcoin, and two, institutions are also diversifying beyond Bitcoin, and three, multiple cryptocurrencies are going to do tremendously well. Coinbase is what we talk about next. On yesterday's live, I was asked a question regarding Coinbase, essentially in the hacking situation. Well, I have some updates on that matter. And essentially, it's about Coinbase rejecting essentially the hackers' responses of the $20 million ransom. And what Coinbase has done instead, and what Coinbase has done to protect themselves so this never happens again. So, Coinbase rejects ransom launches of $20 million bound, and essentially does a $20 million bounty fund. Coinbase recently announced its decision not to comply with $20 million ransom demand, following a security breach involving bribed overseas, essentially customer support agents. So Coinbase essentially, if you're wondering where the hacking started from, Coinbase is essentially remote workers, you could say, not inside the United States, abroad, were the ones that leaked certain information. Instead, the company has initiated a $20 million reward fund to apprehend these, essentially, those people that are responsible for compromising their employees that essentially work abroad. The breach highlights vulnerabilities in support systems affecting trust levels within the crypto community. Immediate action was taken by Coinbase internal security measures and prevent future occurrences. Coinbase reported a significant breach involving overseas support agents bribed by cybercriminals to access customer data. The breach led to $20 million ransom demand, which Coinbase refused to pay. Instead, the company is offering a $20 million reward fund for information leading to the arrest. Key players in the breach include bribed overseas customer support agents that used to work for Coinbase. Coinbase has stated that these agents abused their access to internal systems. Instead of paying the $20 million ransom, we're establishing a $20 million reward fund for information leading to the arrest and conviction of the attackers, Coinbase essentially official statement sources said. Actions taken include collaboration with law enforcement and attachments to insider threats. This is a detection. Mechanisms, essentially, the breach effects has been significant, impacting Coinbase's reputation and necessitating increased security investments. However, no direct digital assets were compromised. Essentially, what the hackers have is people's names, house addresses, their phone numbers, and their emails is pretty much the max they have. They don't have access to anybody's wallets, or they're essentially able to take out money from anybody's wallets on Coinbase. All they have is their names and house addresses and so on, which they can probably use to send some sort of fraudulent Coinbase letters to tell people they're Coinbase and they should be moving their assets to this wallet and so on. That's the only way that the scammers could probably make any sort of money from that information, which essentially that's why Coinbase saw it as useless and said, instead, we're going to pay $20 million to find out who you are. Regulatory attention and community concerns were stayed essentially by the breach, leading to a focus on the security of major crypto exchanges support systems. However, no abnormal crypto outflows were reported, indicating strong custody safeguards were in place, so nobody's wallet was essentially affected in any sort of a way. Coinbase has strictly essentially utilized insider threat detection technologies and updated their protocols to mitigate further risk. Enhanced security strategies are crucial, paired with community essentially driven initiatives to ensure industry resilience against similar attacks. So that this situation will never happen again. Coinbase has introduced some sort of new platform to catch their employees if they're giving out information. But if you are somebody that uses Coinbase on a regular basis, don't worry, Coinbase is still safe in their own words, and it hasn't been compromised in what essentially the news might describe itself as. Coinbase has been compromised, it's not safe, everybody, essentially run away from Coinbase. It's nothing like that. At best, the hackers have everybody's, not everybody, but certain people's email addresses, probably house addresses, and some phone numbers and some names. They can do nothing with that except try to contact people through email addresses pretending to be Coinbase, or send people letters pretending to be Coinbase. That's at best all they can do. And that's why that information was absolutely useless. And Coinbase just said, you're telling us to give you $20 million. Instead, we're going to put $20 million on your head for other white hat hackers to essentially reveal who you are, because there are good hackers and bad hackers. The white hat are the good hackers, in other words, in the simplest way to put it. The bad hackers are essentially the black hat hackers. Now, what we're going to talk about next, moving off Coinbase to Panama and El Salvador. Latin American countries are actually expanded quite a lot inside the crypto space, to be fairly honest. There's a tremendous amount of things are happening in Brazil, for example, in terms of their crypto regulations, their crypto ETPs and ETFs that are introduced, and essentially other laws they're trying to bring in for the crypto space. And the amount of blockchain companies that have moved to Brazil, or essentially El Salvador, has done tremendous things inside the blockchain sector as well. Panama, and Argentina has done certain movements inside the blockchain space as well, which one of them went sideways when the Argentinian essentially president was essentially involved in a crypto scam, but that was mostly to do with his sister, believe it or not. Now, Panama and El Salvador discuss Bitcoin reserve strategies. In a significant step towards essentially cryptocurrency integrations, Bitcoin integrations, the mayor of Panama City has held discussions with officials from El Salvador, the first country to make Bitcoin a legal tender, about essentially developing a national Bitcoin reserve strategy. This diplomatic engagement underscores a growing regional trend. Latin American countries seriously exploring cryptocurrencies essentially at their national financial systems. The meeting reflects Panama's increasing interest and economic advantages of holding Bitcoin at a national level. With inflation concerns and global financial instability, Bitcoin offers an alternative store of value for essentially, El Salvador. And El Salvador's early adoption of Bitcoin and its launch of a national reserve and Bitcoin bonds has made it a regional pioneer in Latin American countries. While essentially official details remain limited, sources suggest that the discussions were essentially revolved around the frameworks of El Salvador has used and how Panama might essentially adopt it. Topics like essentially likely include Bitcoin treasury reserves, legal frameworks, and crypto-friendly infrastructure between the two countries. Panama has already essentially taken initial steps towards crypto regulations, and early efforts to pass crypto legislations shows the country's intent to become a regional crypto hub. A national Bitcoin reserve would further align Panama with decentralized financial future many in the region are starting to embrace. The move, if successful, could signal a domino effect, encouraging essentially neighboring countries to consider similar strategies with more countries, showing interest in Bitcoin, and could essentially see a rising demand on sovereign level. This meeting could be a pivotal moment in Central America's economic transformation, and El Salvador has essentially weathered criticism and volatility since embracing Bitcoin, but has remained committed. And what I mean by that is the International Monetary Fund trying to bribe El Salvador to drop their Bitcoin reserves. Now, Panama seems to essentially be considering a similar long-term view. It makes sense for Panama to be involved inside the blockchain space because they are sanctioned, so it makes a lot of sense essentially for them up to a certain level, not sanctions, but up to a certain level. For investors and crypto enthusiasts, it's a bullish signal Bitcoin's influence in expanding essentially beyond private markets into national strategies. It is honestly great to see more countries adopting the idea of cryptocurrencies, without a doubt. But Latin American countries are doing tremendous work inside the blockchain sector. Those are the regulations, the ETPs, the ETFs. They're doing a lot of work, to be fairly honest. Now, what we're going to be talking about next, moving off essentially Latin American countries to UBS Bank. UBS Bank has came out with certain details. And also the UBS Bank, you could say, has some sort of relevance to the other news that I just read out for you regarding what the CIO of Bitwise said, which is you need to start diversifying beyond Bitcoin. Not my words, just want to say this out. It's not my words, not financial advice in any sort of way. But the CIO of Bitwise saying you need to diversify beyond Bitcoin. Institutions are also diversifying beyond Bitcoin and Ethereum, and that in multiple cryptocurrencies are going to benefit quite a lot. So on what Bitwise's CIO said, here's some information, some data points from UBS. UBS, a global wealth management firm, has came out with a new report today that its clients are now allocating up to 5% of their portfolios in cryptocurrencies. As highlighted in its 2025 Global Investment Returns Yearbook, UBS, the massive global essentially wealth management company, endorsements of crypto signals growing institutional adoption, reshaping portfolio strategies, and addressing currency essentially volatility concerns. In a strategic move, UBS has officially adopted cryptocurrency allocations up to 5% for its wealthy clientele and tokenized assets also. This marks a shift in institutional essentially attitudes towards cryptocurrencies as legitimate diversification tools rather than speculative essentially instruments. As noted by UBS, cryptocurrencies are now viewed as an important tool for portfolio diversifications rather than just speculative assets. UBS's wealthy clients are now allocating up to 5% of their investments into cryptocurrencies, reflecting essentially a broader trend of diversifying away from US dollar based assets and towards alternative investments. The strategy primarily involves larger establishment cryptocurrencies with altcoins used occasionally for hedging. The institutional support from UBS for digital asset highlights for the change in perspectives and legitimizations of cryptocurrencies within traditional finances. Investors simultaneously increase their allocations to traditional safe havens like gold, for example, signaling a sentiment shift towards alternative store of value. This development could also affect financial markets by normalizing cryptocurrency investments among major financial institutions and potentially influencing other wealth management firms to follow in suit. UBS strategy and adoption of regulated infrastructures, as explained by UBS spokesperson, we have essentially developed UBS Tokenize to support our clients in gaining exposure to cryptocurrencies in a regulated environment. For crypto investments, highlighting essentially growing concerns over US dollar stability and the demand for diverse asset protection. Wealthy investors' increased cryptocurrency allocations reflect growing usage of digital assets as economic hedges impacting wealth management practices. Cryptocurrency's role as a legitimate portfolio component may influence regulatory and technological conversations around the adoption of digital currencies in investment platforms. So, UBS Bank, essentially UBS Wealth Management, Global Wealth Management, comes out today and tells the entire world that their wealthy client base essentially has now decided to essentially allocate 5% of their investments into cryptocurrencies and also some tokenizations and some gold as well. But again, it just goes back to the whole idea of diversifying beyond Bitcoin is what's really happening right now. The main reason, a perspective that I may have, is that the reason why they're diversifying beyond Bitcoin is because what we're heading towards is the finance run. You could also say as well, the financial run is what we're heading towards, where we're seeing day by day the traditional financial space and the crypto space essentially joining hands together. And that the more we go towards regulations, the more the traditional financial space and crypto is going to get closer and closer. The projects that are going to benefit the most inside the crypto scene are the financial projects, which essentially will be XRP will be the biggest key player in that sense. Some people might hate me for saying this and so on, but I've always supported XRP and I will always support XRP in that sense. But it makes sense for and finally somebody higher up from CEOs and CIOs and CFOs and so on, and executive board members have come out and said, diversify beyond Bitcoin. It really, not financial advice in any sort of a way, but my perspective is that because they're seeing the pattern on that matter of what we're going to be having as a financial run is a very regulated, the next leg we're about to be having is a very regulated, structured financial run pretty much. Where the finance projects are going to do the best out of the rest of crypto projects. The rest of crypto market space will also go up in price because of all the excitement that's going to be happening with all the regulations, more liquidity coming towards the market space and so on. But then at one particular point, essentially the rest of crypto projects that don't have any sort of relevance or utility will start simmering down. And the ones that still have utility will continue going up, especially the financial projects, because they're the first ones online. What makes the world spin? Is it AI? Is it gaming? Is it Web3? No. What makes the world spin is money. Money going digital is what you should be looking at, number one. Now, let's go to the comment section first. Shelly says, how do you see the financial tokens, ISOs, crypto tokens play out in relation to once the bull run is over, and typically we head back into a bear market compared to other sections like gaming and data? Great question. Playing on the part where essentially, saying the market space in general, a lot of people inside the crypto space are right now presuming, as I said previously, some people believe the market for those tokens will come back down, similar to previous bear markets, etc. Your perspective, please. Great question. A lot of people inside the crypto space, crypto influencers, I'm not going to name who they are, but a lot of them don't understand how the financial markets are supposed to work. I'm not saying I'm the king and I know how the markets operate 24/7. But if you know where to look, you'll have a better understanding, which is, one, it's not the same traditional market space, and it's just not me saying this, and it's Grayscale CEO, as I said previously, it's Franklin Templeton said this, Bloomberg has said this, essentially, or Eric and James' perspective, Nicholas, JP Morgan's analyst has said this as well, which is we're not in the same typical run. We have Bitcoin ETFs, we have ETPs for cryptocurrencies around the world, we have more companies daily getting involved, bringing more liquidity to the table, we have contracts that have been made inside the crypto space and the financials, we have countries changing their laws to bring crypto space in, we have banks getting more involved daily inside the crypto space. So you cannot compare all those things and say, yes, we're going to play out the same way 4-year cycles, because it's just not going to be possible. Which is a lot of people essentially regarding the crypto influencers out there who are telling people these things. That's the same cycle. We're gonna have the same run. We're not, because in what way in hell would anybody, essentially see that the Bitcoin, essentially the Bitcoin ETFs, for example, you're not going to be seeing major institutional players, the client base, selling off Bitcoin ETFs, feeding into Ethereum, and Ethereum feeding into the altcoins. It's just not going to be possible. If they wanted to go for other crypto projects, they would have went for them. But because the reason why they didn't at that time is because of ETFs, because there is no ETFs except for Bitcoin and Ethereum ETFs. So the chances of Bitcoin ETFs being sold off and going essentially into altcoins is a big lie. That's never going to happen. 2, it also has been proven yesterday that there is actually more investors in terms of the institutional side inside of Bitcoin right now than there is of retail section. That retail section has push themselves out of the Bitcoin space. And there was actually more institutional players of their client base holding Bitcoin through ETFs or essentially MSTR stocks and so on. 3, because of all the banks essentially in play, all the institutions in play, the regulations in play, the contracts that have been made, we can't have the same run. Just regulations in itself is going to add a curveball to the whole scenario of playing in the same scene, because regulations will make the market very, very, structured, standards, a foundation of 4 legs, and so on. Regulations equals more liquidity from banks and institutions entering essentially inside the crypto space, because they won't have to go through ETFs anymore if the market is regulated. If the market is regulated, they don't have to go through ETFs and be in gray areas anymore. They can just go through a very, compliant space. So regulations equals banks and institutions enter the crypto space. Banks and institutions equals liquidity. Now, where is that money going to go towards? Is it going to go towards the entire crypto space? No. It's going to go towards the crypto projects that did the most amount of contracts in the last 5 to 6 to 7 years. All those news announcements you were hearing, Ripple signed this company, HBAR signed this company, Ripple brought out that company, AVAX signed this contract and that contract. And all these, essentially major players inside the crypto scene that signed these major contracts, acquired these essentially companies inside the blockchain space, so on. Those are the ones that are going to shine the most under regulations. All those news announcements that you had, and the market, barely moved for those tokens. And every time you hear Ripple signed this company or Ripple brought out that company, you're like, why doesn't the price move? Because they just brought them out or signed with them. Doesn't mean the price is going to shoot up that moment in time. That's just not how it works. But with regulations in place, those contracts or those acquisitions will do tremendously well. So as much as people want to tell you it's the same cycles and so on, it really isn't. And it's not just me who's saying this. It's also Grayscale's CEO who has said that we're not in a typical run of a cycle of a cryptocurrency. We're actually in an institutional run. He said the next clientele entering the crypto space are institutions. And that was Grayscale. And then we have essentially Nicholas from JP Morgan saying next clientele, institutions. Standard Chartered Bank said next clientele, institutions. Franklin Templeton said next clientele, institutions. Bloomberg, Eric and James said next clientele, institutions. So if the next client has institutions, how can we say, and with all the regulations that's going to be in place, the banks institutions that's going to be in place, the countries changing the laws, how can we say, oh yeah, it's the same cycle. We're going to go up and come back down. No, it's just crazy to assume that it's going to be the same cycle when you have so many high-profile CEOs saying it isn't. It's not the same. It's different. So you've got to consider all those points, essentially. The projects that will do the best under regulations, which we're heading towards right now, extremely fast, actually, I would say. It's moving at a much more faster pace than it was before. But the projects that will do the best are essentially financial projects will do incredibly well on the regulations, incredibly well on the regulations. I mean, we've even heard Bank of America's CEO in Switzerland, essentially at the Davos event, say, you know, banks are ready to start utilizing cryptocurrencies. If we have regulations and banks and Bank of America is using cryptocurrencies, for example, let's just presume it's XRP, for example, or XLM or XDC or whatever you want to say. But let's just say Bank of America, you know, CEO has come out and said, you know, banks are ready to start utilizing, you know, cryptocurrencies. He's ready to start utilizing cryptocurrencies. So let's just say he uses essentially the XRP ledger to utilize cryptocurrencies, for example. How can we say essentially that, you know, after regulations, banks start using, for example, XRP like Bank of America? How can we say that XRP is going to come back down because of the 4-year cycle when that bank or other banks will still keep on continuing 24/7 using that token? These are indications that we're not in the same run. This is why Grayscale has said we're not in the same run. You know, Franklin Templeton, Goldman Sachs, essentially, Standard Chartered Bank, Nicholas, Eric and James from Bloomberg. It's because we're not going to be in the same set. Regulations equals the continuation of going higher. Obviously, stabilizing itself at one price point. But if it's utilized, if crypto is utilized, it's not possible for that token, if it's being utilized 24/7 domestically and internationally by companies, by institutions, by banks 24/7, it's not possible for that token to come back down. If it's being utilized 24/7 under regulations. If that particular blockchain is moving, you know, millions to billions to trillions yearly, it's not possible for that token to be coming back down because of bad news. Because it's being utilized 24/7. And that's what most people need to get through their heads. Also, most influencers need to get through their heads. So, hope that helps. Shelly, great question. Honestly, great question, because a lot of people are confused on that matter. A lot of people are still believing this, you know, BS that, you know, it's the 4-year cycle. We're going to go back, you know, crypto's going to go up and come back down, and that's it. And we're going to wait for another 4-year cycle. Regulations equals banks institutions equals liquidity, which means utility projects will continue going higher and higher until at one price point, no, they'll cap out, obviously. They're not going to continue going towards the sky, but they'll cap out at certain prices depending on how much they're being used. And then, you know, Bitcoin's movements will no longer affect them. You know, if the bad news hits the market space, for example, let's just say, and Bitcoin follows tech stocks and tech stocks go down, Bitcoin goes down because of bad news. It doesn't really matter if projects like XRP have decoupled themselves, they're being utilized by banks 24/7, because that bad news doesn't affect it as much. It doesn't affect it at all, if you didn't say, because it's being used 24/7. No matter bad news or good news, that token is being used 24/7. So that's the whole decoupling essentially situation as well. So great question, Shelly, honestly, because a lot of people are very confused on that matter, and they need to understand that everything has changed. The moment we got ETFs inside the crypto space, ETPs inside the crypto space, banks inside the crypto space, institutions inside the crypto space, regulations inside the crypto space, everything changed. And that's why you have Grayscale, Franklin Templeton, Standard Chartered Bank, JP Morgan's analyst, Bloomberg, Eric and James analyst, saying to everybody, even Bitwise has came out and said this as well. Next clientele is institutional clientele. Even Bitwise today coming out and telling people that diversify beyond Bitcoin and Ethereum. Bitwise's CIO today came out and said, diversify beyond Bitcoin and Ethereum. And he said that institutions are also diversifying beyond Bitcoin and Ethereum. And that multiple cryptocurrencies are going to do tremendously well. A lot has changed. Now, we have also come to the endings of tonight's live. If you're watching this for the first time ever, this was the CMF Live, and this was episode 309 of the CMF Live. If you want to tune into these lives, tune in. You'll learn a lot. I promise you, you would have a better understanding of how everything works around you inside the blockchain sector. And this live airs Monday to Friday, 11:25 p.m. London time. 11:30 p.m. London time, Monday to Friday, which means the next episode of this live, which is going to be episode 310 of the CMF Live, is going to be on Monday. And on tonight's live, we talked about essentially UBS Bank. We talked about essentially on tonight's live regarding Panama and El Salvador in terms of their talks in the cryptocurrency space. We talked about Coinbase essentially rejecting the hackers. We talked about Bitwise's CIO telling everybody to diversify beyond Bitcoin and Ethereum, and so that institutions also diversifying beyond Bitcoin and Ethereum. We also talked about essentially the global price hikes regarding diplomatic events that's going to be happening next week. Apparently, Xi Jinping and Trump are going to be coming out with some sort of announcements. If that happens, crypto market should react in a positive way. If it's good news and bad news, we'll see how that reaction goes. We also talked about the Genius Act in terms of the stablecoin regulation bill. We also talked about essentially the 14 American states, how much they've invested essentially in terms of pension funds into crypto. We talked about tonight's live regarding another Chinese company going towards the crypto space, tremendous investments. We also talked about on tonight's live regarding Eric Trump's perspective on banks in crypto. We talked about on tonight's live regarding Galaxy Digital, entering the NASDAQ, but also thinking about tokenizing their stocks, which is great to see. We also talked about on tonight's live regarding another company entering the crypto space, doing a $1 billion investment. We also talked about on tonight's live regarding Bitcoin, essentially in terms of the Trump tax bill, essentially has happened. And we also talked about tonight's live regarding Trump's new tariffs that's going to be coming in a few weeks. So that was all the news topics we discussed on tonight's live. If you missed tonight's live, just rewatch it. Thank you so much to everybody who tunes in every single night from the CMF, who likes this live, retweets this live, and comments on this live, and comments outside this live as well. Thanks so much to everyone on YouTube who's watching every single night as well, Monday, Friday, who likes the live as well. Post a comment outside. If you haven't done that, CMF members, just take 5 seconds to always like the live and retweet the live if you watch us on X. And if you watch us on YouTube, drop a like always. And if you also subscribed and followed me during this live, welcome to the CMF. Now, before we do go, let's go to the comment section first. Let's see the comments because I don't want to miss anyone's comments. As always, let's see what's going on. You were here. That was my family, day 2, and my mentor is back on the job. Miles, I'm glad to see you yet another day. Let's go. I love and respect my family. Let's go, Scott. I will. Anyone's XRP, I'm a believer. Let's go, Scott. I will not follow institutions to push me out. I'm all in. Let's go for XRP. Let's go, Scott. JP, let's go. There is not going to be a bear market for certain projects. For example, XRP, XLM, HBRO, etc. I agree, 1 billion%. Great show. Take care, all. Ray, let's go. See you tomorrow, brother. I'll see you on Monday, same timing as usual, brother. Denise, good night, Miles and CMF. Denise, good to see you. See you on Monday, same timing as usual. Mickey, have a great weekend, Miles and CMF. You too, brother, have a great weekend. See you on Monday, same time as usual. Thanks for the clarification, Miles. Let's go, Shelly, for the great question as well. And see you on Monday, same time as usual. Congratulations, Miles, on episode 309. Scott, let's go. Mike, thank you, Miles. And CMF, have a great weekend. Mike, have a great weekend as well, brother. See you on Monday, same time as usual. Great night, Miles and CMF. Thanks for the great news. See you on Monday. Let's go free and forever. See you on Monday, same time as usual. Thanks, legend. Wonderful insight, as always. Night and day, CMF. Let's go, Shelly. See you on Monday, same time as usual. Good night, Miles and all CMF. Thank you for the great live and news. Let's go, JP. See you on Monday, same time as usual. XRP, let's go, Mike. Night, Miles and CMF. Pablo, see you on Monday, same time as usual. I'll see everybody on Monday, same timing as usual, 11:25 p.m. London time. Share the live. Let's go, Scott. Thanks so much to everybody who liked and retweeted this live and tuned in every single night on Monday to Friday. See everybody on Monday, same time as usual, 11:25 p.m. London time. This was CMF Live Show, episode 309, where I talk about every single Monday to Friday. I talk about the most recent news happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, vital information for you to know about regarding how the world is transforming the digital space. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. See you every Monday, same time as usual.